Today, we're going to be talking about stated versus declared income.
Yeah, so who's going to use these products? Business for self, people who strategically try to plan their taxes around what type of tax bracket they're in. Usually people who are small business either have most of their expenses coming out of their business account, whether that is a vehicle or your cell phones or whatever it may be. The majority of your life expenses end up flowing through your business somehow. It is great when it comes to your personal expenses, but not so great when it comes to trying to get some financing. So this product was specifically made with those people in mind.
Making sure that everyone at home understands, we're talking about, when you're saying business for self or a small business owner, this is potentially someone that's not incorporated. So literally they're just declaring it on their T1. Or this could be someone that's incorporated and actually has like a corporation set up for their business, right?
Yeah, you can be both a sole proprietor and an incorporated business owner for this product, and it will work on both.
What is up, YouTube? Matt McKeever here. We're back with Josh and Ehren from the Findlay Mortgage Team, and today we're going to be talking about stated versus declared income. And so this is something that I actually remember people talking about a lot more, it seems like, in the past, and they kind of got faded away, but it's kind of back now.
Yeah, the true declared income kind of got wiped out. I think in and around the time Bill B-20 came out, they made some regulatory changes there and what the banks were and were not allowed to do. The stated income product has, as far as I know, been around on the B side for the last few years, at least from when we've been doing our mortgage career. But the declared income has kind of seemed to made a resurgence. Just one of our lenders came out the other day and put some new stuff out about their declared income product. So we're kind of excited about that. It's a very interesting product. I think a lot of business for self guys are going to be pretty excited about it, and it could open up some pretty interesting avenues in terms of financing. So we'll kind of jump into it and get started on it. So first thing, I guess, is just like, what are they for people who want to get a better understanding? A stated income declaration takes a look at how much revenue can you show going through your business account. So, throughout the course of 1 year or 6 months, as you'll see, there's a couple different underwriting parameters, but how much revenue can you show coming in your bank account? You might be writing your income down to $30,000, $50,000, but are you showing revenue coming in the $100,000, the $200,000, the $300,000 mark? And if you are, we can create a financing option based off of how much revenue you can show versus what you're just declaring on your line 150 or what you're showing dividend or T4, whatever that may be. A declared income is just on a declaration. A little bit less restrictions in terms of showing that proof, but some more restrictions in terms of loan to value and rates and stuff. So we'll touch on that in a second here.
Yeah, so who's going to use these products? Business for self, people who strategically try to plan their taxes around what type of tax bracket they're in. Usually people who are small business either have most of their expenses coming out of their business account, whether that is a vehicle or your cell phones or whatever it may be. The majority of your life expenses end up flowing through your business somehow. It is great when it comes to your personal expenses, but not so great when it comes to trying to get some financing. So this product was specifically made with those people in mind. Now, please keep in mind, this product has a premium attached to it. This isn't a super AAA product. This is something that is one step down from AAA. It's a B product. We use it with all of our B lenders. They all have a different version of this product. Some of them use 12-month bank statements, some use 6, some use specific benchmark ratios that we'll get into a little bit later, but it is a phenomenal product for people who necessarily don't show a lot on paper.
And then just making sure that everyone at home understands, we're talking about, when you're saying business for self or a small business owner, this is potentially someone that's not incorporated, so literally they're just declaring it on their T1. Or this could be someone that's incorporated and actually has like a corporation set up for their business, right?
Yeah, you can be both a sole proprietor and an incorporated business owner for this product, and it will work on both. Yep. So I guess the first one that we'll take a look at is the first product is based off of the lender's perceived overhead expenses. So based off of the industry and then based off of the income bracket that you're making, they have a certain amount of overhead expense they use, and then there's a certain percentage of that gross business income that we can use. So one of the examples we have is, let's just say a software engineer, business for self guy. Maybe he writes his income down to $50,000, but overall he makes $250,000 gross. he gave us his 1 year's bank statements, which is required on this particular product. We went through the 12 months, said, yep, okay, we can show $250,000 of revenue coming in. Good. We talk to the lender. We say, hey, we have a software engineer. He's making $250,000. What are we able to use? And they say, okay, we can use 65% of that gross business income to qualify. So now instead of using $50,000, we're qualifying at $162,500, which obviously quite a substantial amount more, which is going to boost up that purchasing power and allow him to get into either the property that he's looking for, or maybe qualify a little bit more than what he would have been able to on on the A side, or just using his T4 or dividend, however he were to pay himself. So this product, they prefer to be a professional. Someone who, like in particular, some real estate investors who have just opened up their first corporation, maybe they sold one property last year and they showed $100,000. They're gonna have a really hard time using this product for that. Simply because you made one transaction. There was no proof of multiple transactions, proof of being able to reproduce that income. You're going to have a hard time using that. They want someone who's a professional, someone who has consistent checks coming in and pertains to a certain industry career field.
Yeah, it definitely helps you stretch your qualification. Most people who have businesses, most of the people we see have multiple six-figure revenue streams coming into their business. Usually probably around, I'd say, the $250,000 mark. So the difference between what you show on paper, which is usually between $40,000 and $50,000, versus the $162,500 that is the average of what we could use to help qualify, it's night and day. Now, as I said, there's a little bit of a premium. There are some lender fees and broker fees involved in it, but to be able to stretch your qualification and get to where you got to go, this product is phenomenal.
So the second type of product that we have is on a stated income form. So this one revolves around the same premise. We have to be able to show that gross revenue coming in. So again, if we were going off the same example, let's say $250,000, you would start with the $250,000. This one requires you to kind of give your own write-offs. So maybe you have some office supplies, maybe you have a secretary that you pay, and maybe you want to write off your car or your company phone. Deduct your small business expenses, and then what you're left over with, that's going to be our total net qualifying income. So again, maybe when you do your full taxes, you're writing it down to $50,000, but on this stated income form, you're able to deduct your small businesses, and maybe you're in and around that 160, 150 mark on your stated income form. They're going to require at least 6 months bank statements to just show that revenue coming in, and then either average that out over the year, or if you have all 12 months, again, we can use the 12 months to make it work. Whatever kind of shows better in terms of the strength. And again, it's another way to, instead of paying the full amount of tax, to show that qualifiable income on paper, do your write-offs, and then being able to use that stated income definitely helps to increase your affordability, like Josh said. They still follow the standard B qualifying. So, there's a minimum credit score, probably 570, 550. You're qualifying at 50% GDS, TDS in most cases, maybe 48%, but substantially higher than what you are on the A side. There's going to be your 2% fee. And you have the ability to go up to 80 and 75%, depending on if that credit score is 680 and above, and which lender you go with. The other cool thing that they can do is, if you're, say, like a realtor and you receive like a T4A gross commission slip, some of these lenders will allow you to do a 2-year average of your gross slips and just use that to qualify and do your write-offs that way. So depending on which career field you're in, you may have a little bit of room to do that. But again, just another way to maximize, the amount of income you truly are making to help you qualify instead of what you're showing on paper.
So conventionally, what we would do is we would take a look at 2 years history of your T1 generals, and we'd use those averages. Important to know, you still need to prove you've been doing this for 2 years, whether that's a business license, articles of incorporation. They do want you to prove that you've been doing this for at least 2 years. It shows some sort of history and repeatability with your income over time.
The last one that we're going to talk about is the declared income. So this one's interesting. There is no need for bank statements on this one. It's a declaration of income. So there's a form that you're going to fill out, who you are, what your business is, whether it's incorporated, whether you're sole prop, and then how much do you make, and then a signed declaration stating that income statement to be true. Like I said, no bank statements needed. And with this particular product, there is no debt servicing. So we're not worried about TDS and GDS ratios. Now, there are some limitations on this. We can only go to 65% loan to value conventionally with that lender, but they do allow for a second mortgage to be registered up to 85%. So, there is some room there for interesting and creative financing because, on the typical side where if we're looking at credit unions or loans on the conventional side below 80 that want to use that second mortgage, you do have to qualify on that second mortgage payment. On this declaration of income, we're not worried about having a debt service that second mortgage. So might be some room there for some creative options to kind of get into the financing. This product has a 1 or 2 year term, so more short term than that long term 5-year stuff. Has the ability to be amortized over 30 or 40 years. So on that 40 year, really keeping those payments low and affordable, which is great. Now there is a bit of a rate premium on this. So the rate does start at 6.49, and that's going to be for just an owner occupied purchase. Under $1 million, when you and a 30-year amortization. There are some rate premiums when we start to go into a rental. So there's going to be a 25 basis point premium for the rental, another 25 basis points if the property value is over $1 million, and then another 25 basis points if you want that 40-year amortization. So it does cost a little bit because of the risk to the lender. There are some increased costs there depending on how you're looking to structure it.
So this product in particular is almost like a quasi product in between a private loan and a B loan. So if you are in a situation where you are faced with a private option, and that private option might be 8% and maybe a 2% fee or 2.5% lender fee and maybe a broker fee as well. You start adding it up, it's a little bit expensive. So if you qualify for this, it's pretty great that you're with a bank. First of all, this is a Schedule A bank that has a B side product that offers this product. The rate is decently affordable considering the type of income that you're trying to show, 6.5%, and they keep their fees decently minimal. So if you say have gone through a bankruptcy or you have credit issues or you can't show your income some way, you're going to be able to have a registered loan with a bank to show consistency in making those payments as well. So this is a phenomenal product that kind of fits in between the space in the market that it was just either very black or white, and we now have options, which is pretty cool.
One thing to note is there is a maximum on the loan amount. So we're looking at 1.25 as that max. Now there are some exceptions for Toronto, like true Toronto area. They might be able to get it up to that $1.5 million area. But again, there's a much larger risk to the lenders on this, so they aren't willing to go $3 million, $4 million on that just because of the assumed risk. So it does come with a maximum of 4 properties on the borrower's profile. So, that includes your primary residence. If you're purchasing this with a holding corp, which I don't even think they would do, but it would include those properties on your holding corp as well too. Anything that's on that application, you're going to be limited to the 4 properties. And the minimum beacon is 570. So again, for those people who have that bruised credit, if you're coming out of bankruptcy and consumer proposals, I think they want you to be 6 months out, and then they're able to run it from there. But just get your stuff kind of dealt with, reestablish, and then we're able to work with you from there. Whereas, conventionally on the A side, you're 6 to 7 years for some of these products. So, and they do, this works well for, like Josh said, people who maybe have trouble showing their income, consultants, anyone who's commission based, just guys like that. So it's a great alternative product to be able to get in, get maybe a little bit of creative financing going on and do what you need to do from there.
Yeah, last but not least, you don't need to be in business for 2 years to use this product. You just need to be in the same industry for 2 years. So you just need to be able to show you've been doing what you're doing for a prolonged period of time, which is a pretty cool little trick to this product that I think a lot of people are going to be using this product. It's going to be a handful of different scenarios that I think investors are going to take advantage of this product with. And we're excited to tell everybody and offer it to the market.
Awesome. Yeah, really appreciate you guys always just bringing new novel products to us, to the audience, because again, as real estate investors, at some point in time, you maybe want to transition full time into being a real estate investor. And those first couple of years can be really difficult if you're also trying to get, say, your personal residence. So just understanding that there's always a solution out there. You just need the right person on your power team. So if you guys want to reach out to Josh or Ehren, we'll have a link in the video description down below to their contact information. And again, you guys, they can actually just reach out for free, right?
Yes.
Give us a call. Yeah, we're always available.
Awesome. Thanks, guys.